After a wild week, you're probably asking what's next. Well, I'll tell you what's next. We have inflation data coming next week, and that could rile the market. We have inflation data, we have CPI, PPI, we have the RBA making rate decisions, we have Aussie employment, US retail sales, University of Michigan consumer sentiment. A lot's happening next week in a very thin market. The markets are thinning out as summer is in full swing, but that doesn't mean you shouldn't be trading. My name is Blake Morrow with ForexAnalytix, and you're listening to the Week Ahead video. This is the Week Ahead video for August 10th, 2025, although today is August 8th. I'm filming it to you on a Friday. So really exciting stuff happening this week. So make sure you all stick around because I got so much to talk about. I'm going to talk about what's happening next week, the associated currencies and markets that could be moving. I want to talk about our risk management webinar that we just did and how you can actually get a copy of that video still. You can still get a copy of that video. So stick around for that. And also, I'm going to talk about something else that's coming up this next week. And if you guys think you're like a really good trader, like one of the best, I'm going to talk about something that's coming up this next week that might excite you. So make sure you all stick around for that. And guys and gals, if you like these videos, you think they're instrumental in you getting ready, preparing for the next week, make sure you give me a thumbs up, subscribe to the channel, subscribe to the ForexAnalytix YouTube channel. It's free to subscribe to the channel. So this way you don't miss these videos. It's also free to give me a thumbs up and the team a thumbs up, and comment down below if there's something that I might have missed that could be moving the market. So let's get into everything that's happened this week, and I'm gonna start with actually, you know what I want to start with? I actually want to start with the nomination of Stephen Miran, who is filling the seat of the Fed Governor Kruger, I believe her name was, that she just left. And so Stephen Miran for the next 5 months is going to be put in at the FOMC. Now, this is important. Now, it's an important topic, and I'm going to bring up the dollar when I'm discussing this. It's an important topic of conversation because if you don't know who Stephen Miran is, Dr. Stephen Miran, he's from Hudson Bay Capital. And the end of last year, he wrote, and I'm going to show you where you guys can find it. If you're in the ForexAnalytix chat room, I'll tell you what he wrote. You go over to the S&P room. Michael Brown from Pepperstone and I were talking about this, and you can actually get the link right here. It's a user's guide to restructuring the global trading system. He wrote that at the end of last year, and we had it in our news and research room. We posted it months ago, but this is the easiest way for you to find it right now because, you know, going back months and months and trying to search for it, you got a lot of stuff to search through. So you just go to the S&P room, you can find it. But anyway, the reason why I want to bring this up is that seat was supposed to be allocated for whoever was going to be the next Fed chair. Everybody thought it was Kevin Waller, Kevin Warsh, who one of the Kevins, one of the two Kevins. But now we have Stephen Miran. Now, initial knee-jerk reaction was weak dollar. Why? Because, well, you know, he talks about basically, you know, the U.S. dollar is the reserve currency and how maybe a trade deal might have to be done with tariffs to, you know, weaken the dollar amongst our trading partners for trade reasons. Basically, people have coined it the Mar-a-Lago Accord. Now, I don't think that Stephen Miran would get the nod, but I could be wrong. But he wasn't on anybody's bingo card. Let's just put it that way. Going into yesterday, no one was talking about it. No one. The reason why I don't think he would be nominated for the Fed chair is because I don't think he could be voted in or pass through the nomination process through the Senate, the House, you know, the banking committee and the, you know, financial committees. He'd have to be voted on to be nominated. Because of his views of the dollar, I don't think that would be the case. However, if he does get the nod, that doesn't mean he's gonna be voted in. But if he gets the nod, the dollar could have a very negative reaction just because of his stance on the dollar. Now, once again, it's very extreme, but it's. I mean, look, we're dealing with the Trump presidency, so is it possible? It is. And so that could be, something that really puts some downside pressure on the dollar, at least in a knee-jerk reaction way. So I want you guys to be thinking about that as next week. It's a big deal. It is a big deal. All right. Speaking of another big deal, this week we did a risk management webinar. We had 7 of our analysts from ForexAnalytix talking to the group of you. I've been mentioning it the last several weeks. You have to be a subscriber to our newsletter, which goes out once a week. You can actually go to our newsletter right here, right at the top where it says newsletter, forexanalytix.com, newsletter. Or more importantly, if you click right in the middle here, it says something big is coming. If you want to learn about trading analytics and our release this fall, this signs you up for the newsletter as well. This weekend in the newsletter, a link, private link to the webinar that we did on risk management will be in that newsletter. You have to be signed up for the newsletter to get that risk management webinar. It was extremely successful. We had so many traders in attendance. And I bring this up because I believe as a trader, this is your key to longevity into trading the markets. Traders that have proper risk management, money management skills are the ones that will succeed over time in the markets. Period. End of story. So if you are listening to this video and you're like, well, I'm just here to make a buck really fast, this might not be the place for you. But if you're looking to trade and have this as a part-time job, trade to make additional income, maybe do it full-time at some point, then you should be listening to that webinar. It was amazing. It was an hour and a half long. So get signed up for the newsletter. Okay, last thing I want to talk about before we get into the rest of the week. If you guys think you are the best of the best, you can be the best of the best. Well, the Gelber Group is now running the breakout, the second breakout, which is basically a competition to try to get a job with the Gelber Group. Now, if you don't know about the Gelber Group, Brian Gelber, let me go, here's Brian right there. There's Brian. Okay. So if you've ever written or read, and I've got the book right over here, Market Wizards, he's one of the original market wizards, and he's built a trading empire in Chicago, New York. Their group of traders are amazing. I know several of their traders. I know traders that have traded there. I know traders that aspire to trade there. They do basically proprietary trading, but in a physical form. So if you want to see what their offices look like, let me see if I can go give you a better view of their office. Not there. There's better views of their office. Anyway, the Gelber Group, awesome people, and I know some really great traders from there. And so what we're doing is we're helping them. I should probably go to the breakout here. We're helping them helping them find traders that could be of elite status to join their group. Now, you have to go through a couple of things. You have to submit your trading records for the last couple of years. You have to be interviewed, and only a few are selected. We actually had a few of our traders selected for the last competition last year, and I joined the competition. I'm joining the competition again this year. I think last year I got 8th place out of 40 traders, and I was trying, but not really trying because I was focused on other stuff. But I'm going to try a little harder this year. I kind of want to take first and just compete. You want to compete with me? Do it here. All right. Now, a couple other things. I know the guys that are putting this together. They're wonderful. We're going to be interviewing them on Wednesday. So if you go to the F.A.C.E show, if you know how to get to the F.A.C.E show, go right here you go to our home page, go to webinars, right? And then we have 2 free shows. We have the Flow show, which is our European show. You should be registered for that. And then our F.A.C.E show. It's free. You can just listen to that. It'll be at 9 a.m. Eastern on Wednesday. So after Dale's interview, I don't know who he's interviewing next Wednesday, but whoever he's interviewing, after that, we're going to have a 15-20 minute talk about the breakout competition. One of our traders that's in our chat room every day, he was in the competition, ended up trading for a different proprietary firm out of New York. But he knows all these groups. He went through the process with me and did really well. But like I said, he ended up going with a different firm closer to his house in New York. Anyway, you know who I'm talking about, Wuju. I'll see you in the chat room on Monday. Anyway, check it out. That's going to be on Wednesday. All right, now that I'm past all of the stuff that I wanted to kind of all the housekeeping stuff, let's actually talk about the markets and what's happening this next week. So I'm going to turn your focus and your attention over. Actually, I'm going to go over to the euro dollar. I'm going to go into the charts that we draw on. Now, the euro, just we've been looking at a triangle that looks like this, capping it at 118. But I still look at the euro as potentially some unfinished business at the 161% extension and also 120. So if we reach higher towards the 119, 120 level, that's still, I think, great levels to be on the short side of the euro. Now, how could we get there? Again, think about Stephen Miran joining the Fed. Think about him getting the nod. That could instantly put the euro dollar at 120. Again, I don't think he could get the nomination. I don't think he would eventually become Fed chair. I doubt it. But President Trump and the Trump administration seems to have a lot of sway in certain things, so you can't rule that out. But is there data this week that could potentially move us up there? Potentially. I mean, CPI is really going to shape the narrative of the market because everybody says right now, because of the weak jobs report, weak ISM data that we got this week, weak jobs report from last week, everybody's already starting to become bearish the dollar again. And if CPI comes in below expectations, that could be, another catalyst that drives that euro back towards these highs, just above 118 and back towards 120. So keep your eye on that. That's CPI on, by the way, that is on Tuesday. But Monday night, we're going to actually have the RBA rate decision. Now, I do want to talk about the Aussie because the Aussie is nestled, and I'm gonna zoom us in really quick, and I'm gonna draw some things here. So I'm going to take this. There's that. Let's get rid of this one. Let's take those highs. We're going to make this a channel, which you can see is very, very neat and clean. Let's get rid of this. And you can see we're really nudged around this, 618 retracement of this entire move lower. So we are in the middle of what you could call a range right now. You can see it's very, very clear. We're right in the middle of the range. RBA is expected to cut next week, but because of Australian data, the question is, wait a second, are we going to get, a cut? Is there something more to that? There is a risk that we can challenge the upper or lower end of this channel sometime next week. So I'd be looking at the Aussie and plus you got employment data on top of that. Could move the market. Wednesday we have UK GDP. I do want to say that sterling, we're in this head and shoulder pattern. We broke back above the neckline, which now since we had a pivot off the 618 retracement, you can see it here. We had a pivot off the 618. We moved back through the neckline. The head and shoulder pattern is not negated because you can see. I'm just going to draw this out for you guys. You can see over here we've been up at these levels before. We're right at those levels right now. But I personally don't have any pound US dollar or sterling exposure in that sense. I do have sterling exposure in another way. And if you want to know what trades I'm in, all you have to do is go to our trades room, right? And you can say, oh, look, Blake picked up the loonie here. Oh, Blake got out of the loonie for 16 about 40 minutes ago, exactly to the minute, and Blake is also running a euro sterling long, and he's down 12 pips in the trade. Hey, if you want to know what positions I'm in currently, you can always go to the trades room. There's a nice record of exactly what I'm doing. That's good for you guys, right? It doesn't mean you have to trade what I'm trading, but to know what I'm doing and to be able to ask questions, like for example, earlier today, I was talking about the euro sterling, and Pete asked about what I'm doing with it, and I'm like, oh, we're in a harmonic pattern. Don't worry, we should be bouncing off of this the cipher pattern. He's like, cool, right? So if you want to have conversations with me in the chat room, like Pete just did earlier today, you can do that only if you're in the ForexAnalytix community. But you can access me probably about 14 hours a day, roughly 12 to 14 hours a day. All right, continuing on. Wednesday, we have that, sterling. I don't have any feel for the pound dollar right now. I know there's so many traders that are very bearish sterling. I'm kind of agnostic right now, and the reason why is we had a more hawkish than expected Bank of England cut. It was based on votes, so I'm just kind of neutral here. But we do have UK GDP next week. Now, the last couple of things aren't necessarily market movers, but we are going to have US PPI. We're going to have U.S. retail sales and University of Michigan consumer sentiment, and so that might be a little bit of a banger at the end of the week next week with retail sales and consumer confidence. I'm gonna focus in on the U.S. dollar Japanese yen really quick. I'm gonna delete some of the stuff that we've had that's kind of old as far as drawings go. What you're going to notice here, as far as the U.S. dollar Japanese yen goes, is we are struggling on this move to the 618 and the 127% extension. You can kind of see it right there. That's kind of the zone for resistance, but at the same time, I think this is very, very good zone for support. So if you want to trade on the long side, you can see the 50 DMAs right here. If inflation comes in better than expected, I think you have some upside. Between 146 to 150, you got plenty of upside here. Now, should we revisit the 150 level, or just slightly above 150, we're coming into a resistance zone, and I think that's the way you can probably play the yen. The yen is a tricky one right now, but the dollar data and yields will be moving the dollar, and I think the dollar yen could be one of the more sensitive currency pair plays if you want to do that. Now, like I said, that's what is happening for this week as far as economic data goes. Now, I'm going to bring in Nick from Trading Analytix. He wants to cover a couple of key markets that he's looking at. But when I get back, I'm going to cover gold. I'm going to talk about the S&P. I'm also going to talk about the NASDAQ100. I'm going to talk about what's happening in crude oil. And then I'm going to give you my top 3 setups of the week. But I'm also going to review the 3 setups, trade setups last week. And we do that every week because for accountability reasons. Every week you can judge me, if you will. Why not? Everybody else does. So I'll see you back here in a few minutes. Enjoy your time with Nick.
Hello everybody, my name is Nick Groves with Trading Analytix. Blake, thank you as always for bringing me in. Let's go ahead and talk about this fun week where the markets managed to actually bounce back this week. Taking a look at the weekly SPX candle, really nice run right back up. And I think bears got quite excited on that fall, and after it fell, typical market runs back up. Everyone who got short probably under 6,300 got stopped out, and it's still managing to peek its head up again. If you're a bear, I think your main risk is that we did see a dip, right? We saw a 3.5% dip, call it. Those aren't all that common when you look back to last year, especially where money managers haven't had the best opportunities to buy dips. The last decent one, 3.4% in May. But other than that, this market hasn't really given opportunities. The question is, was that the opportunity, and do we run higher from here? The other thing is, too, a lot of people are now pricing in rate cuts for September. When you take a look at the Fed Watch tool, I can pull it up really quickly. What you'll notice is that the odds of the September cut look as juicy as I've seen them in a long time. The probabilities are stacked in the 90% range for a cut coming up at September. So Jackson Hole's going to be a fun one, but I think people are getting bullish on the idea of that. So if you're a bull, that is your risk. bear. For the bears, though, what I would mention is we are at quite significant resistance right now. This trend line dates back to 2021, a tag in 2022, 2024, and now up here as well. And I know that this current weekly candle snuffed some things out, but this breakdown the other week, this bearish engulfing, not only on the S&P but on the NASDAQ as well, is significant. There's some statistics on situations like that. When you look at the NASDAQ100 having an outside weekly reversal pattern, you'll notice that the 2-week to 3-week return following this, this printed on August 2nd, is really a mixed bag that actually favors the bears. So we'll have to see if that can ring true. Another stat that I want to bring up too is that VIX typically wakes up in August, up 9.3%, 8 in September, 6 in August on the average of the last 20 years. And this actually rang true quite perfectly. We were highlighting this in the chat room towards the end of July when the VIX actually did have that nice, sorry, I clicked on the Dixie. VIX actually did have that nice move up, but it feels like that's all getting snuffed out. So we'll have to see. August isn't always the most fun month. Can be a bit of a buckle up month, especially in post-election years. So I'm not entirely convinced that the bulls are out of the woods here where we're just going to start running to all-time highs. September, too, seasonally, past 10 years, the weakest month. So we'll have to see what ends up transpiring. Me personally, I do feel as if there could be some sideways price action before an eventual decline. The target that I'm looking for is going to be first and foremost the back test of all-time highs here at 61.37, and then below there 59.18, the 38.2 retracement. And if you take a look at some very standard moving averages like the 200 daily moving average, that also rings true around here. So if we begin to see weakness, let's say there's a situation where price breaks below back testing that all-time high and comes down to here, I think everyone's going to start saying, oh, that was it. And then maybe big money in retail rips this thing back up higher. That's my gut feeling. I don't know if that's going to happen, but we'll definitely be here covering it with you all. One of the stocks that we have to talk about this week is Apple. Apple had some great news on it and some investment, and it is really ripped on higher. We've been looking at Apple, and you probably haven't seen me talk about it much on these week aheads because it's simply been in a range. Since April, it's just been stuck here. And all I could say was if it breaks above 215, that tells us something, and below 195, that tells us something. Well, it finally broke out. And you'll notice it also broke out from this resistance trend line as well. So now it's breached above the 618. It's getting some good momentum. I think that is a concern for bears. Okay, Apple's been stagnant, fears of tariffs perhaps, and things seemingly are looking better for that stock. So it can have the potential of running up to 240, potentially higher. What I will say is if it somehow breaks back into this range, that will be very telling for us. So this is definitely a stock to be watching. It's a little nerve-wracking when a stock goes sideways for a while and gets movement. On a grander scale, take a look at Microsoft. This one moved sideways for about a year, and you've seen just the gravity of the move lately. I mean, from the lows in April, that stock went up 60%. Okay, so I'm not saying that's what's going to happen in Apple, but I think we need to be cognizant of the risk of some form of squeezing. Taking a look at Tesla too, another one that has some concrete technicals going on. It's broken out from this descending trend line. Okay, this started in December of 2024, tag in June, tag in July. We were just talking yesterday in the community about the fact that this is starting to condense and coil, okay, where it now might break. I know that's in red, but picture it in green. And it also had the option to break lower, right? But it hasn't. So unless this gets back below 320, I'm going to consider Tesla bullish at the moment. If it does get back below there, you're going to be looking for support at 300. Now, as far as where this can go, I'd probably be looking for some extensions. If this really gets going, I'd be looking for first the 127 around 390 to 400. Now, Some might say that's crazy. Well, remember, we're right near all-time highs still in this equity market. I know there's some nice weekly trend lines to be looking at. However, if that kicks off back up to the upside, Tesla could certainly make a run like this alongside stocks like Apple that are also waking up. So just be cognizant of that. And with that, I'm going to go ahead and pass it on back to Blake. Thank you all so much for tuning in with me, and have a great weekend. Cheers.
Thanks, Nick, for your outlook on the markets. He's actually recording the exact same time I'm recording, so I don't get to watch his segment until after this video is already out. But I know his analysis is amazing. So if you like his analysis, you think it's good for you for preparing it for next week, give him a thumbs up. By the way, Cisco is one of the bigger names that is reporting next week. In case he didn't mention it or didn't look at it, just FYI. So I want to take a real quick look at the S&P. Let's take a look at it, because here we are, almost at highs once again. We are again in summer markets. One of the problems that I have with summer markets just in general is that volatility is down, and so if volatility is down, that means markets tend to be stronger more than weaker. So as a result, I'm still looking at the S&P for a move up towards the 6520 level to finish off wave 5. And hell, we could get up there as early as this week. I can't rule that out while we remain above. Oops, that's not what I wanted to do. While we remain above, let me get to it. While we remain above, I keep grabbing the wrong thing. We trade above. I was going to say something funny. I'm not going to say it. It's not so funny. Above 6150 is what I was trying to say. As long as we remain above 6150 and above the 50 DMA, no reason to be bearish. There's a catalyst maybe, but look, one of the catalysts that could drive us higher is President Trump and Putin are meeting next week. If you get a ceasefire with Ukraine, and U.S. doesn't impose a bunch of tariffs, or not tariffs, sanctions on Russia, the market's going to see that as a positive. S&Ps could trade at new highs as early as next week. So, don't rule out new highs while we're above the 50 DMA. So let me say that again. Don't rule out new highs while we're above the 50 DMA that you can see right there. Okay. All right, so that's the S&P. I did want to talk about gold. One of the things that's keeping a bid underneath gold, notice, and I'm going to delete some things. I want to delete that. I'm going to delete this really quick. Let's delete that, and let's delete that for a moment. One of the things about gold, we remain on the underside of this broken trend line. We talked about that broken trend line pretty much every week for the last few weeks. Why are we pegged up at these levels? There's some talk right now of tariffs and how the 39% tariffs on Switzerland is going to impact some gold imports, and you can see widening of price between London gold and U.S. traded spot gold. So it's keeping a really nice bid in gold. And right now, if you own gold and you're thinking about it at the moment, it's not bearish. It's just nudging the underside of this broken trend line. And frankly, if we break these highs that you see right here, right through here, it comes in at 3440 roughly. Yeah, 3445 I think is what we can see it as. We break above that, and we're at fresh highs and probably brand new highs. So gold still looks very well bid. I get bearish gold on a move below 3250. I think we've talked about that on multiple occasions, and we're just not there, and we're holding well above. And as you can see, actually a higher low is being created, which is a bullish development, FYI. All right. I did look at the S&P. I meant to take a look at the NASDAQ too. I should take a look at the NASDAQ100. The NASDAQ100 continues to rock and roll higher. If you go to our weekly charts, we haven't looked at obviously NASDAQ in a while. You can see how we're broken out above that channel, and now we're holding. So, we could have had a throw over if we broke down this week, but because we haven't, it looks like we're going to continue to rally. And so with NASDAQ, let's go to high to low here. Okay, 127% extension is just above. And then a move beyond that, we're looking at 26,000 in the NASDAQ100 to give us the 161% extension. The NASDAQ doesn't look bearish, guys. It looks opposite of that, bullish. And if volatility remains low, that's another catalyst that can continue to drive it higher. You know, one of the other things that's happening right now is, as you can see in crude, crude is finally starting to break below that 64 level. We talked about this over the last few weeks, and you can see if crude does a simple ABCD, let's get rid of this really fast because I think we can kind of get rid of the pattern. But if we do a simple ABCD right now, you're talking about a move that can take us back down towards the mid 50s and see how crude is vulnerable, right? One of the things that could continue to press stocks higher is if you see the U.S. and Russia, patch things up a little bit, and you have the situation gets a little bit less tense. You have ceasefire, Ukraine, Russia. That means there's going to be more oil on the market. That means there's going to be ample amount of oil, which is just going to drive prices lower. So next week could be the week that drives crude oil back down towards 60, and maybe even lower than that. So keep your eye on crude. I think it's worth noting. And with that being said, let's talk about like the top 3 trade setups of last week, and let's see which were the best ones out there. But before I do that, I want to say, if you don't know how to take advantage of all these markets, well, check out the Trader Funding Program. See, I talked about the Gelber Group a little bit earlier. They're a brick and mortar proprietary trading prop firm, but if you want to be able to do it from your home, check out the Trader Funding Program. You have 2 different methods you could go. You could go into immediate funding. That means you can skip an assessment, or if you want to go the more economical approach, or more affordable approach, would be taking a 1-step assessment. We have very simple rules. So stand by, listen to this 2-minute video on the Trader Funding Program, and when I come back, I'm going to cover the top 3 trade setups of last week and give you 3 new ones for this next week. Are you looking to get funded as a trader? Why would you want to get funded? Well, the markets are extremely volatile. There's a lot of great opportunities, but because of the volatility, you don't want to risk your own money. You'd rather risk somebody else's money. That's why traders get funded. At Trader Funding Program, we have 2 different options that you can choose from. 1, instant funding. That means immediately you can access up to $100,000 in capital. Now, by doing that, you have risk parameters you have to follow. You can't lose more than 8% on a trailing basis. That means as you're making money, you can't lose more than 8%. You also can't lose more than 5% intraday, because we want to make sure you can control your risk. That is your instant funding program option for you. But let's say you wanted to take a more economical approach. You can access up to $1 million with the 1-step assessment. Now, the 1-step assessment, that means that you can't risk more than 6% of your high water mark to pass your assessment. That means as you're trading a demo account, as you make money, you can't lose more than 6% with an unlimited amount of time. Once again, you can't lose more than 5% intraday, because we want to make sure you can control your own risk. Now, with either option, you have the ability to keep up to 90% of the capital that you make. 90% of your returns. That's pretty awesome. You know what else is great? With either one of those options, you get included in the ForexAnalytix community for a certain period of time. The ForexAnalytix system does analysis on 30 different instruments, everything from currencies to gold to indices, and it gives you different trade ideas, analysis, live squawk feed, so you're up to date on news. You have risk management tools, everything that you would need as a trader in your toolbox to help you become successful. But more than that is you're included in the ForexAnalytix community, the private chat rooms where you have access to me and other analysts from ForexAnalytix. Imagine being able to see what I'm trading, to be able to talk to me and other analysts and other traders and see what they're doing and ask questions. Why trade alone when you don't have to? You should utilize a company like Trader Funding Program for your funding needs. So check out Trader Funding Program for more information. I'll see you soon. All right, traders. Again, Trader Funding Program. If you're in need of capital, or you just don't want to risk your own capital, or you just need more capital, check out the Trader Funding Program. It's a great option for so many traders, and that's why we continue to offer it, because it's been a godsend for a lot of people. All right, let's talk about the trade setups from last week. So first trade setup of last week was long Loonie near 138. Now, this trade did not work out. I would not necessarily give up on it, but you can see we were near the 138 level last week, and I was like, if we can get, we were trading just below, and I'm like, if you can get it just below 138, that's great. We continue to drift lower, but notice where we're drifting lower on. We're still on that triangle. So I wouldn't necessarily give up on the dollar CAD. I was long earlier today. We had weaker Canadian employment. Actually, unemployment rate was better than expected, but the headline number was worse than expected. I still think that the dollar Canadian can lift from here. I still think it looks, like it's very well supported by this previous triangle trend line. But for all intents and purposes of this video, if you bought it on Friday and you're looking today at this Friday, yeah, it didn't work out. So trade number one didn't work out. But like I said, if you're long dollar CAD, I've been playing long dollar CAD all week, and with mixed results. But and you can go to the trades room and see exactly how I'm trading the dollar Loonie, just like I did today. I mean, I picked it up and I sold it already. So, you can do the same thing. Anyway, that was trade setup number one. Trade setup number two, long Euro Swiss above 93.35. Yeah, that worked really well. And I was aggressively long, and I'm still long, as you can see. But you can go back to the trades room and say, oh, well, Blake, you're still long. Yes, I got out at 94.23 or 24 is where I got triggered my exit when we spiked up there yesterday. So I got out right at these highs, because I know all this resistance is right here. And then I re-entered yesterday at 93.96. So obviously this one's working out great. And if you're trading it like me, it's probably worked out double great. So, hey, one trade setup worked, one did not. Third trade setup, short copper below this week's lows. Well, this trade just never came to fruition. Copper continues to hold above that level right there that we were talking about at 4.25. We never broke it. That doesn't mean it's not going to break. I look at copper and it still looks very vulnerable. It just didn't come to fruition. So we had one trade that didn't work, one trade that did work, and then one that just it didn't happen. A lot of times you make trade setups and they never get to the place that you want to be involved. That's fine. All right. So there you go. 3 trade setups. We talked about them last week and we reviewed them this week. Now, what are the top 3 trade setups of this week for me? Well, I'm going to take you over to the dollar Mexican peso. If you guys haven't noticed, the dollar Mexican peso is near its trend lows. And you're like, man, Blake, you've been talking about the dollar Mex making a base. And I have been. And frankly, I've been playing the dollar Mexican peso on the long side, selling it, as it bounces. But today we're closing in on a really key support. Now I'm going to zoom you out and I'm going to show you the lows. You can see them right here. The lows from April of 2024 to the highs of this year. So you have a 2-year range. The 618 retracement comes in at 1821. What I think is going to happen is we're going to break through these lows and then we're going to bounce right off of that 618. So I'm looking to get long the dollar Mex at 1822 next week for a bounce, and it's counter trend. All right, so that's trade setup number 1. Trade setup number 2, I'm still going to go back to the Euro Swiss, because if the U.S. brokers a peace deal between Russia and Ukraine, what you're probably going to see is you're going to see more Swiss francs unwinding. Now, the president of Switzerland came to the United States this week, and she tried to meet with, she met with Marco Rubio. She ended up not meeting with Donald Trump, so she went home empty-handed, facing 39% tariffs in Switzerland because of the pharmaceutical trade, luxury goods, you name it. So that is what goosed the US dollar or the Euro Swiss higher. And frankly, if a peace deal is made between Russia and Ukraine, that's less reason to own the Swiss franc. You could actually see the Euro Swiss move towards 94 cents. I'm looking on a breakout of look at my notes, 94.30, targeting 94.90, which will be right here, but I think you could actually target even higher than that. But I think you'll be back at that. Actually, that's not correct. I need to adjust that, because that is not what I should be looking at. The next move would be 94.96, which would be the 618, and then beyond that, you're talking about 95 cents, 95.70. But I think reaching the 618 retracement is, on a breakout, is very, very doable for the Euro Swiss. Trade setup number 3. Trade setup number 3 is to short the euro on a move to 117.50 and risk above the highs. Because look, I think the euro has topped out around these levels. So I am looking to sell the 78% retracement, which will be right here at 117.50, 117.45. And I'm looking for a move and failure up at these levels. So that's what I'm going to be looking for next week. So those are your top 3 setups for next week. And guys, I'm going to tell you, it's been one hell of a week for me. It's been a great week of trading. It's been very volatile. There's been a lot of things moving the markets. And with the risk management webinar on top of everything, it has been one hell of a week for myself and for all of us in the Forex Analytics community. I hope you join the community. Take advantage of the sale. Right now we have the 40% off sale. You can bring your prices basically down to 2019 levels, and once you're in at the which is basically $89 a month, which is $3 a day. $3 a day. Once you lock in those prices, you are then locked in. Because the sale, when it goes away, prices go back up to $150 a month. You are grandfathered in at this price. So take advantage of the summer offer, and I hope you are enjoying your summer. And I hope that I get to see you on Monday morning on the F.A.C.E show. And I want to thank you all for spending your time with me. I know these are long videos, and I know you're watching them on the weekends, and this is your personal time. So for you to take that time out and spend it with me, I appreciate that. So thank you all for doing that. And again, if you like the video, thumbs up, subscribe to the channel. I'll catch you guys Monday morning. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.